Check out some of the key highlights from today's Apple event. Tim Cook announcing a new budget iPhone, a new iPad Air, a brand new Mac featuring Apple's M1 Ultra chip, and a host of new colors for the iPhone 13. But the big event failed to woo investors. Apple finishing more than 1% lower, its fourth straight down day. For more, let's bring in Loop Ventures partner Gene Munster. Gene, I don't know, it didn't seem that exciting, any of these things. It seemed kind of iterative. I mean, the chip is kind of exciting, but other than that, what's the big deal here?
Well, Melissa, just to put into perspective, it may be constructive, is today we're talking about 5 to 10% of Apple's business is being upgraded. That compares to their fall event where 50% of the business gets upgraded. So by definition, this is going to be a smaller number of the products. And I think if we look at the products across the board, the iPhone SE, it is iterative. It's a small upgrade, but it is a price increase. I think that is a critical piece here that's getting missed by a lot of investors. For them to actually raise price on their entry-level product, I think it sets the tone for what their product demand is. And it's still really hard to get a hold of Apple products ultimately. So I think that's going to be one of the big drivers here going forward, is what the supply availability of these products are. And I think another piece that gets lost is they keep delivering despite all of these headwinds. They keep coming out with these great products despite the fact that they've been working remote, supply chain issues. And I think that that is probably the most important takeaway here, is that ultimately they continue to be the gold standard when it comes to putting great products out. And I think, again, you're right, 5 to 10% of the revenue doesn't catch investors' attention, but I think it's important that they just step back and collectively look at the body of work that Apple continues to put out.
Hey, Gene, it's Karen. Thanks so much for being on today. I ask you this all the time. What's your price target? I believe it's $250, but how do you get there between services, hardware, and wearables? How do you break that down?
It is $250. It seems like a stretch case here, but I want to kind of anchor back that if you assume a 32 multiple on what I think that they're going to earn next year, call it 720, you get to that 250. Their current multiple is about 25x. I think to go and campaign for a higher tech multiple in this environment seems like I am out of touch. But I do believe that if we fast forward 3, 6, 12 months from now, assuming we do get through many of these headaches, I think that we will see multiple expansion. And I think what it all keeps coming back to, Karen, is that that 250 number is really predicated on what we're seeing today, is Apple's ability to continue to put out great products. If they do that, upgrade existing products, come out with new products, and enter new product categories, I feel that this is going to continue to surprise investors on the upside, not only with earnings, but also multiple expansion.
Gene, they announced Major League Baseball. At some point, there will be baseball. I think we all can agree on that. But the holy grail here is National Football League. Does that get them closer to the NFL?
It does. And just to put some perspective around this, it is the holy grail NFL. Major League Baseball is about comparable in terms of advertising revenue versus the NBA. And when you think about the opportunity with the NFL, I think that that's definitely on the table here. And I would put it this way. There's a high probability, I would say greater than 75% in the next 1 to 2 years, we're going to see a deal with Apple. And it's this simple, is that content continues to be king. Apple is going to spend about $10 billion in content this year, Amazon about 15, Netflix about 20. And I think that the biggest opportunity for them really to continue to activate a base of paying subs is through the NFL. And I'll put a little teaser on there too. I don't think they're going to stop at the NFL. 2 to 3 years from now, I think that they're going to do Formula One. It's a sport that I don't watch, but a lot of people do. And it's another example, I think, of how Apple can continue to expand beyond baseball, football, and other sports.
Gene, great to see you. Thank you.
Thank you.
Gene Munster, Loop Ventures. Let's trade. This guy had mentioned the valuation before and whether Apple deserves this sort of premium. We've brought this up before, whether Apple should be priced where it is relative to the S&P 500, given its projected growth for the next year. But Gene makes a very good point, and I want to underscore it, that the product announcements that they came out with today may actually prove that they're on top of supply chain. They are still able to come out with this despite what is roiling a lot of other tech companies out there, Dan.
Well, or are they raising prices on their low-end products that are supposed to kind of, be for a larger, pool of consumers because they have to deal with the supply chain issues? I mean, that might be. Yeah. Listen, they're supposed to have a 43% gross margin. At least that's what they have basically guided to, and that's what consensus is for this year. That would be the highest gross margin this company has had in a decade. So here's the thing. I'm going to throw out a number, 10%. Okay, 10%. If the stock goes down 10% to 140, and you think about the way PE multiples have contracted in the S&P 500, and this stock is supposed to have the same expected earnings growth in this fiscal year as the S&P 500, that's when you get this stock super cheap. That's when you basically say to yourself, you're not going to get to his price target, 250, anytime soon, but that's where the value territory is. That's where you're going to get the growth of the services and all that higher margin stuff at a good value, and that's my only point about this stock right here and right now. We dedicated a whole A block to it last week. Yep. Let it come to you. It has to come to you before this market is done going down. Apple has to participate. All the other stuff, iterative, great. They're going to financial engineer. They bought $20 billion of stock back last quarter. They're going to continue to do that. They probably get more aggressive if the stock's down 142 and accelerated buybacks, but you need to have it come to you a little bit.
Yeah. Seemed like the A block the other night. So, you're right, and I think that's probably around 140 is at least an important level on the stock. I tweeted out today, and I understand the venom that guys sometimes feel comes his way when he talks about Apple. I just said, the cracks in the foundation are happening, and people don't want to hear it, but it's making lower lows. And outside of that Jan 24 low, looks like we're going to break below the 200, maybe not. I do think that the hardware as a service dynamic of Apple is something that we've now kind of assumed. We all know that basically we are going to continue to trade in this phone. We are going to continue to be part of a cycle where services are a bigger component, and that's why it's holding this multiple. I just think that if you look back at the consumption of MacBooks, wearables, and clearly iPhones in a refresh cycle over the last 18 months, it never gets better than this.
Karen, just quickly, at what point does a premium to the S&P 500, Apple's premium, concern you?
Oh, it's probably getting close right now. But I do think, though, that this, I think Dan brought it, it's a beta of not much higher than 1. So I feel like what the market does, as the market goes, so goes Apple. And so if we get a bounce, then I think Apple will bounce. If not, I think it will drift in. I am long. I'm not going to trade around it. But I think down is more likely than up.